Whoo-wee. That boy Slack. Let me tell you about this boy Slack, okay? Down 16% after hours after reporting earnings. Already off 5% in the normal trading session. Just a couple of them, 16% down after hours. Down to around $32 per share. Again, this is, take it with a grain of salt because this is a stock that's really had a run up since its March lows of 120% upward movement. So, this stock is still up pretty darn high, all things considered. It is dipping below its IPO range, when it IPO'd last year. So you can think about that as well. But overall, we're going to take a look at these results and see why in the world it might have dipped 16% here and what's going on with this stock. Because, naturally, as I anticipated, was a beat in terms of the revenue line. And honestly, they did a great job beating top line as well as far as this EPS is concerned. I got to be honest, I'm pretty impressed. Non-GAAP EPS of negative 2 cents beat by 4 cents, and a GAAP EPS of negative 13 cents beat by 4 cents. Very good improvement, all things considered, in terms of EPS, and I expected a miss for this quarter, right? I expected costs and expenses to be rising quite a bit, and I thought that they were going to post actually a pretty bad loss, somewhere around the negative 20 cent mark as far as EPS is concerned. So definitely, it's good that I was wrong on that aspect. So pretty nice of this company to post that. Revenue of $201 million, up 49.6% year over year. Very good growth year over year. And that beat by $13.58 million. And I did see a revenue beat coming out of this company because, stay at home. This is a stay at home stock, right? This is a company that benefits from this current stay at home movement. I can't say if it's a movement, it's just kind of life, the stay at home lifestyle that is. So, pretty interesting there. Calculated billings were $206 million, which was up 38% year over year versus a consensus of 189.2. Pretty nice. So we'll look at some more details, then look at their press release. So shares around more than 50% over the past month, as I mentioned, and again 24.3% over the past 5 days. Holy crap. So people are naturally just, the stock's cooling off a little bit, right? It's cooling off a little bit, and it just happens that way sometimes. Revenues are up 50% to 201.7. A phenomenal quarter, says Stuart Butterfield, the CEO. That's right, his actual name is Butterfield. Who says work from home jolt will have an impact of generational magnitude and continue to catalyze adoption in the company's category. And absolutely, I do agree that it will, right? As we talk about really this stay-at-home lifestyle we're living right now, this is really forcing businesses just in the future to change how they do business. A lot of these are going to be lasting impacts that we see from this pandemic for companies. There are companies that will keep doing Zoom video calls instead of having conferences, in a boardroom. It's just going to happen that way. There's companies that are just going to be partnering with these tech companies, and for various reasons, right? Whatever they need to. And that number's just going to keep rising. And I think the businesses aren't just going to stop using these companies afterwards. They're going to find out that it's convenient and typically pretty cost effective. And they're going to end up sticking with them. So that's just kind of how long-term impact works for these things. Paid customers rose 28% to 122,000. Of them, 963 made up more than $100K in annual recurring revenue. Pretty nice, which is up 49%. Net dollar retention rate was 132%. Gross profit rose to $179.2 million. I have no reason to be tired. From $116.9 million a year ago. Gross margin rose to 88.9 versus 86.7. You love to see that margin rise. No, the rise. That was Bane. Operating loss was halved to $16.6 million from a loss of $33.8. Halved. Can you believe that? A company that all things considered, I called it garbage. I called it a garbage IPO because of the money loss. And here they go. They're doing a good job proving me wrong. I got to be honest. I'm pretty proud of this having the loss. Pretty good job there. Net cash from operations was $8.7 million. Actually a positive number. Gotta love that. Versus a year ago, use of cash of 14.1. So you gotta love that. Free cash flow is a positive 3.7 versus a negative 34.2 million a year ago. Positive growth. You like to see that, right? You like to see it. It's initiating guidance for Q2, expecting revenues of 206 to 209 million, year-over-year growth of around 42 to 44, above the consensus of 199.9 million, and EPS of -4 to -3, above the consensus of -6 cents. So overall positive growth. Guidance for the full year sees revenue of 855 million to 870, which is in line with the consensus of 861.3. So where that you wouldn't expect a little bit higher full year guidance for this company. I don't know. It just seems weird because full year guidance, if you're saying that you reaffirm that this is going to be a long-term benefit and people aren't turning back, CEO Mr. Butterfield, why don't you boost that full year guidance? You know, it just kind of seems weird to me. If you're going to boost next quarter's guidance, I think you would assume you would boost full year guidance. I could be wrong. Guess what? I could be wrong. And an EPS of -19 to -17 versus a consensus of -20. At least they boosted that. Full year calculated billings guidance due to pandemic was withdrawn. So if we look at some of these fine, and I say fine, sizzling, fine details here. Quarter one was a phenomenal quarter for Slack with an additional 12,000 net new paid customers. This is how Scott Butterfield talks. Stuart Butterfield. He's not Scott. I'm so sorry. Stuart. My name's Stuart Butterfield. We believe the long-term impact. That was Bane again. He's back. He's Stuart Butterfield. Impact of 3 months and counting of work from home will have on the way we work is of generational magnitude. This will continue to catalyze adoption for the new category of channel-based messaging platform we created. And if it's going to continue, I'm just saying, just talk about that full year guidance. You know I love talking about it. Why doesn't it boost it? I don't get it. Overall, we saw these nice numbers here. Over 41,000 paid customers using shared channels, up from the 32,000 at the end of last quarter. Pretty nice there. And over 750,000 organizations on either a free or paid subscription plan, up from the 660,000 at the end of last quarter. Nice. You gotta love that. The guidance, we took a look at this guidance. We're going to take a look at the balance sheet on this company. Now that they're actually posting a positive cash flow, free cash flow positive. That's right. You don't expect to see it for this company. I didn't, but we'll see. So current assets on this company right now, we're giving a quarter-over-quarter comparison. I had to say that because sometimes I tend to mumble the words a little bit. Trying not to mumble, okay? Cash equivalents of 1.2 billion on this company. I'm calling it billo instead of billion, versus 498 million of last quarter, so doubled in terms of cash equivalents. So they definitely raised some capital. So I'm anticipating that liability line to be higher before we look at it. Total assets in general of 1.6 billion versus 900 million last quarter. Total assets in general of 2.1 billion versus 1.4 billion last quarter. Are you tired of me saying billion yet? But total liabilities, let's take a look. So total current liabilities of 507 million versus 519 million. Current liabilities did shrink just a little bit. Pretty nice, actually, if you think about that. Accounts payable is not that bad for this company of 12.9 million. Accounts payable is pretty good, and they have the cash to handle it at this point. Now, they do have total liabilities here of $1.3 billion. Now, that did nearly double year over year, or quarter over quarter even, so they raised a lot. You see these convertible senior notes. They had to raise capital, and that is where you see that ugly number there, $1.3 billion in terms of that. Stockholder equity did increase, though, all things considered, 840 million versus 723. So there is positive. It's a positive-looking balance sheet for this company, all things considered, if they can maintain their positive free cash flow, right? And as long as they can maintain positive free cash flow, they're fine. I still think overall the balance sheet's not in as beautiful of a spot as I necessarily want it to for the price of this stock. Even over $30, I don't necessarily think I believe is quite fair value for this company. We're talking about a company trading at a market cap of $21 billion when you're expecting an annualized revenue of $860 million. Right? I don't know if that's just me, but trading over 22 times the multiple there is a little egregious in my opinion, and I understand people are buying it for the growth potential here, but I just don't necessarily know what could possibly warrant that high of a valuation at these levels. I don't necessarily know a good buy rating for this yet, or when necessarily the price is to buy on this, because it's not a company that I'm fully sold on quite yet. I'm not quite there, and I'd like to see profitability first before I tell you what a good level is. But I certainly know even at these $32 levels, that's still not really a good level for this stock, in my opinion. And I could be proven wrong. Obviously, long term, this thing could be a beast, and I could be completely wrong on the matter, but I think the run-up's been too incredible for it, and naturally, that's why you see this big, massive downward movement today. So yeah, I'm not necessarily buying into this stock quite yet. I think it's going to be one that's probably got a lot more room to go downward before it starts going upward again. And I could be wrong on that, and if I am, well, you know what? I apologize. But that's just my opinion on the matter, and I hope you enjoyed.